Morning, folks. Happy to be here with you all. Uh, just going to go through some slides here on Jaguar Mining. We are a Brazilian-based gold producer, and I'll just go through these slides, leaving some time for questions at the end. So forward-looking statements. And so where are we? We are in Brazil, and you can see the outline within the Brazil map there. That is the state of Minas Gerais. And we are TSX listed with a small corporate office in Toronto, 2 people, including myself. But our head office in Belo Horizonte, which is the capital of Minas Gerais, that's where the bulk of our management is. And we've been producing continuously since 2006, over 1.7 million ounces produced to date. So the management team, I want to just highlight Vern Baker. I met Vern about 20 years ago working at Barrick, and he's the main reason why I decided to join Jaguar in the middle of a turnaround story in mid-2023. Marina Freitas is here with us today as well. So what we are 2 underground gold mines operating within a day's drive, visit underground and return home for dinner from Belo Horizonte. The Pilar mine and the Turmalina mine. Last year, they produced over 70,000 gold ounces. And so why invest? This is an investment thesis, I think, that's pretty compelling. We have the base of Pilar and Turmalina, which produce 70,000 ounces. We expect that we'll produce roughly the same amount this year in 2024. We have an opportunity at our Pilar mine, which is a new zone that we discovered, and I'll have some slides on it later, BA Torre. That could be a material improvement in production at Pilar in the coming years. Number 3, we have the FINA project, which is an expansion of the underground resource at Turmalina. It's a new project as such. That'll increase from 70, it'll add about 30,000 ounces to our annual production. And then number 4, we have the Onças de Pitangui project. This is a project that came through the acquisition, which we completed last September, of IAMGOLD Brazil's subsidiary. And this is a 3rd mine, basically, that will increase our production by an incremental 38,000 ounces to 130,000 ounces when that gets rolling in 2026. So Pilar, 5-year history. I think the key highlight here is that we milled 405,000 tons with a capacity of 750,000 tons per year. So there's a 45% excess capacity at that property. And this is an underground side view of our Pilar mine. And this shows that the green section is the ore that we've mined from the BIF zone, basically. And the red that you see in the upper part of the mine there is historical mining of the BA zone. And that zone disappeared basically after the sort of year 7. And the focus has been on the banded iron formation. However, last year, early part of the year, we drilled 3 holes out into where we thought there might be something, and the geologists proved to have some foresight, because these 3 holes came back showing 10 meters at almost 21 grams per ton, almost 7 grams per ton over another 10.5 meters, and another 25 meters at just under 7 grams per ton. So, what did we do with this? Well, this is a top view of the same thing, so it just shows the location of those 3 holes. But we drilled, we developed an adit, or not an adit, a drift across at the 15.2 level, just to go through this new section, just to prove out what's there. And you can see that in the middle of the slide, that line that was developed out there. And at the same time, we drilled further holes. And so this is a plan view of a 130-meter drive through the new zone. And as this drive was driven, it followed the geometry of the mineralized material. And what we found is this 6-meter width throughout this development, with samples that were taken at various intervals showing impressive grades, 5.6 grams per ton, or sorry, 6.2 grams per ton over 5.6 meters, 12 grams a ton, 7.3 grams a ton, and 9.6 grams a ton. And so why could this be so important for Pilar? Well, essentially, it could double the mineable ounces per vertical meter below level 15. But more importantly, it could also add up to 8 levels above level 15, because historically we didn't think there was anything there. But critically, this incremental production could reduce our all-in sustaining costs by between $400 and $500 per ounce. That would put us, based on the 2023 all-in sustaining costs of just under $1,500 for the Pilar mine, it could put us at about $1,000 of all-in sustaining cost per ounce. So this is significant. And this is just another measure of why we think this is so exciting. If we look at the continuity of the grade through this zone, and we calculate the gram meters per ton, which is the grade in grams per ton multiplied by the width of the zone, along this development, that gram meters per ton works out to 49. And in 2023, all the other mining that we did at Pilar, that same measure works out to just 20 gram meters per ton. So this is why we think this is so compelling. So switching to Turmalina, our other underground mine, 5-year production. Again, here we have in the second box on the right, we milled 408,000 tons in 2023. We have the capacity to mill 700,000 tons. So there's a 40% surplus capacity there. And this is a side view showing on the left Turmalina mine with its A, B, and C ore bodies. On the right, Fina, which is this new underground zone that we drifted across to it. You can see those two twin drives that went across to Fina, reached it by the end of 2023. This is a more close-up view of where we are right now at Fina. And we've been drilling to delineate the development and to establish the polygons and design the mine plan. We expect to be stoping from Fina in the second half of this year. But this just shows some of the exploration holes that we announced on May 21st. Some impressive grades in this section of the Fina deposit. And if we just go back to the last slide, I mean, this added in our last 43-101, it added 132,000 ounces in probable reserves. So this stuff is definitely a source of future production. And we have further infill drilling. The blue arrows indicate where the next infill drilling target will be. So this is ongoing infill drilling to understand exactly what we have in Fina. This is just a picture of the face showing channel samples and grades. And one of the challenges with Fina is that the metallurgy is a little different. The Turmalina mine had mostly initially oxide material and a little bit of refractory as we got into the C zone. The processing plant at Turmalina has done a good job managing that through different mixes of reagents and oxygen and so forth in the CIP plant. The flow sheet appears there. But for Fina, that refractory nature is higher still. And so because of that, we've been looking at different approaches to possibly achieve more value through the processing of the ore from Fina. Direct leaching at the MTL plant looks to be the most likely outcome. Our models decided on a 55% recovery for that ore through direct leaching at the Turmalina plant. That is economic for us at that level. However, we've reached the ore at Fina, and we are beginning to process some of that ore, and we're actually we have reason to think that it could be better than that 55%. And so as we have more clarity on that, we will communicate that to the market as well. But what could Fina mean to Turmalina? Well, it's about a 50% increase in production from 33,000 ounces produced in 2023 to about 50,000 ounces produced. And this would reduce the all-in sustaining costs by between $250 and $350 an ounce. And because it's higher grade, it could also see not just an increase in tons, but also a 6.7% increase in recovered grade. And so the third element of our growth is the Pitangui project. This map shows Pitangui. It's about 20 kilometers or about 12 miles away from our Turmalina plant. The excess capacity of that plant will process the ore from the Pitangui project. And this project was extensively drilled by IAMGOLD over 20 years. Very impressive core shack, and so it's well understood. There's measured and indicated resources of 448,000 ounces at 4.07 grams, inferred resources of another 380,000 ounces. And it's a shallowly dipping, not very deep deposit. And so it'll be a modified room and pillar mining. And the recoveries, because it's oxide material, the recoveries are expected to be 90%. And so just to summarize, we have line of sight growth, BA Torre, Fina, also has the Pitangui, and it's self-funded growth. At these gold prices, we are cash flow positive. And just by way of illustration, in 2023, we realized a gold price of $1,936, and we had all-in sustaining costs of $1,516. So there was a $420 margin on all-in sustaining costs. In the first quarter, which we announced through March, we realized a price of $276 an ounce, all-in sustaining costs of $1,485. So almost a $600 margin in Q1. So just to underpin the self-funded growth. This just shows the location of our operations: Turmalina on the left and Kaite, which includes our Pilar mine, on the right. We have a third complex, which is Paciencia, which is on care and maintenance. It's an underground mine and mill. That's a possible future source of production to fill the excess capacity in our mill at Kaite. And then we also have 55,000 hectares of exploration tenements in the Iron Quadrangle, which is a very prospective part. It's a greenstone belt in this part of Minas Gerais. Financial history. Since 2019, really since Vern Baker joined us, there's been an increased discipline on operation, safe operation, and efficient operation. And I think that's borne out through the positive contributions that you can see there. We ended the first quarter with $26 million in cash, and we are debt-free. Corporate summary: 79 million shares outstanding. At share price last week, 262. That's about $207 million Canadian. Market cap, that's around $150 million US. 62% of our shares are closely held. Eric's brought, and including the IAMGOLD, that was a share transaction, so they took back 6.3 million shares, which they're holding on to until September. And as I said, $26.4 million in cash. We have notes payable. They're current liabilities. They roll over every 90 days, and there's no covenant, so we are debt-free, essentially. Upcoming catalysts, based on what I talked about: Pilar, Fina. Again, we're getting access now. Adding resources for the BA Torre zone, and the second half of this year, first production stopes at Fina. Next year, ramping up Fina production, getting the license for Onças de Pitangui, and 2026 starting production at Onças de Pitangui and exploration on our 55,000 hectares. And so, big revaluation opportunity. Jaguar Mining cash flow per share as well as price per NAV. I can tell you that 11% of the shares are held by senior management, and I've got an order to add to my shares this morning, to be honest. So thanks for listening.